right, guys, we're back with part 2 of this series. Got Jay Wayne with me in the house. What's up, bro?
Hey, I'm excited for this one. We got a very, very good question. Hey, man, let's get to it.
Yeah, let's get it, bro.
Have faith in your mind, have faith in your grind, invest in yourself, transform in your time. Have faith in your mind, have faith in your grind, invest in yourself, transform in your time. Trade and get paid, 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 trade and get paid.
So let's jump into the next question. This one is kind of, people talk about this all the time. How do you keep from blowing your account, and how do you keep discipline? And this is Jose William. Shout out to you again. Thank you for commenting. Let's get to your question. How do you keep from blowing your account? How do you keep discipline? I'm gonna start this one out by saying, number one, risk management is everything. I know that we want to always start with a strategy. This will really help you understand. Go to Google and type in Forex. And the first thing, and you know how it kind of gives you the suggested searches? One of the first things you're going to see is Forex Strategies. And then if you look way down the list, in the lesser searched things, you're going to see risk management. And it's because when people get into Forex, the first thing we start searching is a winning strategy. When truthfully, you can take a 50-50 strategy and make a whole lot of money if you use proper risk management. If you don't have a risk management plan, you really don't belong learning more strategies. You need to learn how to manage your money and manage your risk first. That's more important. So first things first. I've had people come to me and say they took a trade and that trade blew their account. Here's my problem with that. If one trade blew your account, you were over leveraged. It's a very simple question. You should not have been in that large of a position where one trade can take you out. For me, in my trade plan, I use a 1% risk. So if I have 100%, so let's say I have $1,000. 100% is $1,000. So in order to blow that account, I would have to lose $1,000, right? So if I have a 1% risk in that, well, that divides my risk 100 times. Okay, so that means that the maximum I should lose in a trade is $10. So it would take me, after fees and spreads and all that, it's going to take me about 75 trades to blow my account. I would have to lose 75 trades in a row to blow that $1,000. Now, if you lose 75 trades in a row, there's a whole nother problem we need to be talking about. Right? But the truth is you should never blow your account. Blowing your account should not be a thing in Forex, as long as you're using proper risk management. So ask yourself, how much of an account am I willing to risk in every trade? If you want to be conservative like I am right now, 1%. If you want to be like super aggressive, maybe that's 2, 3, sometimes even up to 5%, but never more than 5%. You shouldn't be risking 10, 15, 20% of your account in one trade. That's crazy, because if you lose 4 or 5 trades in a row, which is very common, it could happen, especially if you're still developing a strategy, you could blow your whole account in 2 or 3 trades, 5 trades. But when you're using a strict risk management plan, 1%, 2%, whatever, that tells you how many trades it's going to take for me to lose in a row in order to blow this account. And if that number is 1 or 2 or 3 trades, that's way too much risk. But if you're trading where I could essentially trade 20 times, 30, 40, 50 times in a row, and there's no risk for me to blow my account, that's when you're using proper risk management. What are your thoughts on that?
This is just what I learned over the years, man. People just think that you can't lose. Like, you shouldn't lose when trading.
Right.
Look, let me just tell you like this. If you feel like you can't lose or you shouldn't lose, then you shouldn't be trading. Because that's just part of it. We don't move the markets like that. We're trying to trade with them. Right. And we're trying to ride the trend and the momentum. We're not trying to be reverse trading all the time. what is the word I'm looking for? Go always trading against the trend all the time. We're trying to just move with the money.
Sure.
All right. So sometimes we get caught in the middle area where it didn't work out. That's because we don't move it. We don't know what Chase Bank is doing right now. You know, we don't know how much money they're moving and when they're about to move it. So, you know, sometimes our timing can be off a little bit. We pretty much got it to where it's like 75-80% of the time we're right. But the other parts that we're not right could either just be we're off, you know, we're tired, or it just didn't work out.
Sure.
Right? And it just happens. But we're not blowing our accounts.
Absolutely.
On those the other percentage.
Absolutely.
Right? What, 20% maybe, something like that we're not right. That we're not getting taken out, you know, by, you know, all our accounts bled to zero.
Absolutely.
Just a little loss. You know, for me that may be $1,000, you know, $500, $800, $1,500, and then boom, $2,500 win, $5,000 win, you know, even $7,000 win.
Absolutely.
You know what I mean? And so, you know, we're not blowing our accounts because we understand that, hey, we know how to cut the losses short.
Sure.
All right? And we understand that we want to stick to our rules because our rules is what's giving us the 80% chance of winning all the time, 75-80%. And we understand that the losses will come. So we're not beating ourselves up.
Absolutely.
Guys, you can't be beating yourselves up. I would tell you this. I'll just leave it at this. The people that's trading, the new people that's coming in, it's a new trader born every day. When you start trading, don't sabotage your family. You know, don't sabotage your family and your vision or your goals and dreams by thinking you got to get it in one trade, get it in 1 week. You know, it's an overtime. And once you finally just realize that and accept that, your mind is just going to trade in a different, like it's a different way.
Absolutely.
You know, you're going to trade out of abundance. You're going to always feel like there's another trade, which there is always another trade. You're not going to be desperate for trades.
Right. And he said, how do you keep discipline? I would say you want to get this down to where trading becomes boring, right? Like, and I don't mean that in a negative connotation. What I mean is if every trade you're looking to take a home run, you're looking to hit a home run every time you trade, and you're in the charts kind of going crazy, like, man, this is the one. You're already on a faulty premise. You should get to a place where this is routine. It's just muscle memory. You know, this is what you do. Boom, boom. I set my stop. Check left. Look, check your confirmation checklist. This stuff should be mapped out for you. You should have a process that you follow, and that is built in your trade plan. You know, actually, we had 2 other subscribers who asked very similar questions. Moore Hoon and Jose Rosario, they were asking very similar questions. How do you organize your strategies, backtest goals, things like that? And then he said, what's the best lot size for a $1,000 account? Well, it really comes back to that same principle, is having a trade plan mapped out with risk management, strategy, understanding what that looks like, what's your process, and then sticking to that like muscle memory. You know, it should never get to a place where this trade is different than my last trade. Well, if it is, then you're not following a set of rules, because every trade, now markets will look different, amounts will look different, you know, strength and weakness in the market, volatility changes, you know, that kind of stuff, but the rules never change. You know, if there's no structure, boom, I don't care what the market looks like, I'm not taking the trade. If I don't get, maybe like he said, maybe you're taking a trend line break, that's your strategy. If it didn't break the trend line, I don't care what's going on, I'm not taking the strategy. Whatever your strategy is, that needs to be followed like muscle memory. It just boom, boom, boom. That's what I do. And if them rules aren't applied to my certain circumstance, I'm just not going to take the trade.
And that's where a lot of people, I don't know what it is. It's like some people come in saying that to themselves, and they see the chart, and we see money as the charts, and they just get sucked in like, and boom, they in there.
You know why? And shameless plug, it's because you ain't got a trading journal. Honestly, real talk. You need to map out and document, especially in those formative beginning stages of being a beginner and intermediate trader. You need to map out your trades. You need to be able to go back. If you take a loss and you don't know why you took a loss, there's a problem. If you won the trade and you don't know why you won the trade, there's a problem. You need to be able to look back and know I won or I lost based on a certain set of rules and circumstances. And the only way you know that is if you track. You can't manage what you don't measure. And you have to be able to measure what you're doing in order to have success. So, shameless plug, go get your Trade and Get Paid trading journal. You need one. Everybody needs one. Right?
Hey, look, my famous, you almost said it. My thing is, what gets measured will be improved. You know what I mean? If you measure, like you said, get the trading journal because you're measuring something. Now you can improve on things. But if you have no clue, like he said, nothing is getting measured, nothing is getting tracked.
Yeah.
Well, you're just gonna be in a circle.
Yeah, it's like the old carpenters would say: measure twice, cut once. You know, you don't want to go out there and measure something that's 11 inches, and you walk over to where you're going and to cut the wood or cut the piece, and you're like, man, was that 11 inches? Was that 11? Man, I can't remember what that was. Well, I think it was 11. Well, you're gonna end up messing up a lot of times. If you measure twice, you know, make 100% sure that of what you got, now you can execute with definitive purpose.
Absolutely.
All right, guys, that's the conclusion of part 2. Really, you need a trading journal. You need to be able to track what you're doing, know what's going on in your wins and your losses, and I can help you do that. TradeAndGetPaid.com. Jay, what's good, man? I appreciate you being here.
Absolutely. It's always a pleasure. Just remember one thing. If you don't remember anything, whatever gets measured and tracked will be improved.
Facts. Don't forget to like, comment, subscribe. Make sure you become a student at trendtrading.academy. We'll see you on the next part 3.